evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. Well, yesterday we were celebrating that the 7-day fall in markets had ended. We saw an up day yesterday, but it turned out to be the deadest cat bounce that we have ever seen. The markets today lost seminally, and what is worse, they've ended at the lowest point of the day, at the lowest point of the year, a level we have not seen since October of 2014. So, some severe repairs need to be done. Hi, Surabhi.
Hi, Lata, and I hate to add to the gloom, but perhaps what was so disheartening was right towards the end, we just kept falling with no signs of buyers emerging on the street. We'll get you lots of opinion and analysis, but first, let's start with the headlines. Dalal Street in bear grip as market closes at the lowest level since October 2014. The Nifty falls 2%, ending below 8,000. The Sensex loses 1.7%. All sectors end negative, with banking, auto and realty stocks being worst hit.
The Bank Nifty cracks 2.5%, even as the Reserve Bank writes to the Finance Ministry asking the government to recapitalize some PSU banks. But stocks like AstraZeneca, Novartis and Vedanta were some of them which bucked the falling trend.
The mid-cap index falls 1.7%. Infrastructure stocks like IVRCL, HCC and Gammon Infra fall between 5 and 8%. Delta Corp, ABG Shipyard and Hexaware are some of the other key mid-cap laggards.
And those were some of the headlines from the street, and here are the experts who will be speaking to you on this show. Gautam Chowcharia of UBS Securities will tell us why the global interest on India still remains. And we'll also get you some expert opinion from Ridham Desai and Sanjay Shah from the sidelines of the 17th Morgan Stanley India Summit. All that and more coming your way in the next half hour. But first up, Surabhi, the markets.
All right, Lata, and of course, what numbers to share today. Lots of levels getting broken on the downside. So let's quickly run through the details. Well, after yesterday's relief rally, the bulls were in for a rude shock today. The bears were on the attack, and major indices ended the day at their lowest level in 8 months. Reema Tendulkar is now here with the day's market wrap. Reema, what sparked this massive sell-off today?
Yes, indeed. It turned out to be a very, very bad session for our markets. You know, we've been defending that 8,000 level for nearly 5 times in the last 1 month. That's how resilient that level was. And today it's cracked, and cracked in how? The frontline indices have lost close to about 2%. The Nifty has broken below 8,000 level. And now there's quite a gap between the market, closing level and that 8,000 level. So now that we've broken this important support level, a lot of experts believe that there perhaps is some more downside left for our markets. All the internals were quite weak. So the advanced decline ratio stood at 1:5. There were just 2 Nifty out of the 50 stocks which managed to close in the green. All the sectors were quite weak, and now the Nifty's lost close to about 12.5% from its March high. Remember, that was a level from which we had topped. It was a level of more than 9,000. It's a combination of factors which is weighing on the markets. The delay in monsoon, momentum in other emerging markets like China, no pickup in the earnings calendar. So all this is weighing on the market fundamentals as well. Talking about individual sectors, banks was very weak, in fact underperforming. Bank Nifty was down nearly 2.3%, and look at the massive cuts that you can see across the board. Kotak Mahindra Bank being the big loser. Reliance Industries was also under severe pressure. Keep your eye out on tomorrow will be the Reliance AGM, so ahead of that it was quite weak. Tata Motors is a stock which deserves mention because it was weak not just today, but in fact it's lost close to about 30% from its February high of 600 rupees, and today in a note CLSA has lowered the target price on Tata Motors to 600. Other than that, the key drags include something like an ITC, Infosys, L&T. If you pull out the contribution plate, all these heavyweights, shaved off about 5 to 10 points from the Nifty. Just 2 stocks managed to close in the green, so they deserve special mention. One of them was Vedanta, and the other one was Tech Mahindra. In the mid-cap space, which also, the index moved in line with the frontliners. The mid-cap index was down nearly 2%. High beta got smashed, so HCC, Unitech, HDI are just a couple of losers to point or to highlight how high beta names took a big knock-in trade. But other than that, a very weak session, and it's very disappointing to see that 8,000 level being taken out on the Nifty.
Yes, point taken, Reema. Once again, we are repeating the pattern that we saw last week when the markets lost 2.5% in a single day. It's the debt-laden stocks that are falling. HCC, Reema mentioned that Hindustan Construction was down 8.7%. Likewise, IVRCL, the Jaiprakash Associates Group, all of them were down between 5 and 8%. In Jaiprakash's case, the fall was again about 4.5–5%. Likewise, you saw the real estate stocks, again a bunch bunch of stocks that tend to have high debt. But among them, even the slightly better ones like HDIL also got affected, 4.7% lower. But Unitech was the one which took a pasting with 8.3% lower. Indiabulls Real Estate also fell 4.5%. So these were the two pockets that saw severe selling, but not the only ones. The guys who have lent to infrastructure were also similarly punished. Again, Rima referred to the public sector banks, but among them the standout fall came from Union and UCO Bank. They're severely exposed to infrastructure and to the power sector in particular. They have been beleaguered, UCO in particular, with bad loans in the past. They were not the only ones that were punished. OBC, PNB, other banks also took a pasting. And as Rima mentioned, some of the private sector banks, Yes and Kotak, also saw a lot of profit booking. So what was happening was you saw the beleaguered ones falling. But again, in the infrastructure space, where a little bit of profit was preserved, like IRB also saw a fall. In the banking space, Kotak and Yes, where a little bit of profit has been preserved so far in a year-on-year terms, that also saw profit taking. So we saw the weak ones falling, we saw the strong ones fall.
Absolutely, across the board pretty much. And quite weak for banks, as Lata was explaining. Now let's get in our first market voice of the day. Gautam Chowchoria, head of India Research at UBS Securities, spoke to us from the sidelines of the UBS mid-cap conference. Even though UBS has lowered its Nifty target to 8,600, he says that the interest in India remains quite high amongst investors.
We are seeing the levels of interest among investors very, very similar to the same time last year. I do remember that same time last year was kind of a euphoric environment for India, where investors were just jumping in. And despite what has happened over the last 3 to 4 months in India, that's a slowdown, etc., we're seeing investor interest remain very, very high. A weak monsoon hurts marginally. I think that won't be a big delta for fundamentals from what's already baked in. But yeah, if it's a real bad drought like we saw in 09 or in 02, then obviously it could hurt at the margin. The entire cut in index target just reflects the reset of earnings estimates, nothing else. So it's still based on 17 times 1 year forward estimates, but the earnings cuts and a top-down estimates of 10% earnings growth in FY16 and 18% in FY17, that's what's baked into this target. And this target still remains based on 17 times 1 year forward PE multiple. So basically, the entire thesis of growth expectations being reset, which has happened over the last 3 to 4 months, that's getting priced into the market and into our Nifty target.
It's typical at these times that you want to know what the futures is. So about the futures and the options in the futures. Well, on all the derivatives market, we will have Nigel D'Souza. But actually, the Nifty itself is just 11% away from the 52-week highs. A lot of Nifty stocks as well as mid-cap stocks are already below their 52-week highs. Nigel D'Souza, before he speaks about futures and options, is going to give us that list. Nigel.
Well, that's right. The Nifty and the Bank Nifty, they're only around 13 to around 17% away from their 52-week highs. The mid-cap index as well, they as well are only around 10 to around 17% away from their 52-week highs. But just take a look at some stocks and the distance they are away from their 52-week highs. Let's run through the Nifty stocks first. You look at these commodity-based stocks, something like a K in India, Vedanta, Hindalco, as well as NMDC, they're 40 to 50% away from their 52-week highs. Moving to the banking stocks then, those stocks, in fact, PNB, Bank of Baroda, ICICI Bank, they're 25 to around 40% away from their 52-week highs. While you move to the Tata Group stocks, they haven't had a great run. So Tata Steel, Tata Power, as well as Tata Motors, 30 to around 40+% away from their 52-week highs. And the oil and gas stocks as well, they fared no better, between around 25% to around 35% away from their 52-week highs. So though the headline index, that's the Nifty, is only around 13% away from its 52-week highs, just take a look at some of these Nifty stocks itself. The defensive stocks as well, normally you'll say that the outperformers, maybe they are at their 52-week highs. That hasn't happened this time around. Sun Pharma, ITC, Tech Mahindra, as well as Cipla, a fair distance away from their 52-week highs. But the real carnage is in the mid-cap stocks. Bhushan Steel, JP Associates, something like a Unitech, JMR, Reliance Power, Reliance Infra, big way, more than 50% away from their 52-week highs, telling you that the mid-cap index has been under immense pressure. A few more stocks, Union Bank, Just Style, all of them, they're a good distance away from their 52-week highs. But let's end on a positive note. So in today's trading session itself, the Nifty was under pressure, but a few stocks, they hit their 52-week highs. So something like an Alembic, Aztec, BEML, City Union Bank, all those stocks, in fact, they went to their 52-week highs. In today's trade, Dish TV as well was strong in an otherwise weak market.
All right, Nigel, thanks so much for that analysis. Well, the Nifty cracking below the 8,000 mark for the first time since the 7th of May intraday trade. That was the big headline. Let's get you some views.
We have seen general market weakness, including 8 shares, so Hong Kong shares from their April high. So generally, sort of EMs off about 6%, and India is sort of marginally underperforming that correction from recent highs. So I wouldn't treat this as too India-specific. I do, though, get a feedback from clients that they don't see near-term drivers for the market, and they were disappointed in the RBI credit policy.
The longer-term structure from a 3 to 6 months perspective, even at the low of 7,997 where to go, it makes no difference to the longer-term structure. We are looking at 9,300 plus from a 3 to 6 months perspective. Having said that, let's focus on the short term. I see that the market hasn't yet broken that 7,997 low. Today's low is so far 7,999. But in the event that that low has actually gone, we are looking at something closer to the October lows of October 2014 lows. But there are a couple of supports on the way. So, the short term could look a bit, scary, but from a medium term perspective, it makes no difference to me.
Oh, quite clearly, Jay Bala was speaking to us a little earlier before market close, but it's important not to worry about the falls. Jay expects 9,300 sometime round the corner. On to a CNBC TV 18 exclusive. Realty major DLF continues its debt reduction exercise 2 days after official announcement of the 500 crore rupees DT Cinema deal with PVR. TV18 learns that the developer is now looking to mop up to 1,500 crore rupees by the end of the calendar year 2015 from selling stakes into marquee projects. Manasvi Ghelani, who broke that story, has the exclusive details. Manasvi.
DLF is looking to garner about 1,500 crore rupees by the end of this calendar year. And how is that? It's from 2 assets is what we understand. One is their Delhi project called Capital Greens Phase 2. And this is going to be a stake sale. So we understand that that GIC, which is a Singapore-based sovereign wealth fund, is looking to pick up about 25 to 30% of stake in this particular project for about 800 crore rupees. Now, we understand that Capital Greens in totality is a huge project. It's over 120 acres. So this is just Phase 2 is what we're talking about. Secondly is the Chennai project. It's called Tidal Park. Now this is an ITACZ, which is an outright sale to GIC and Ascendus, and Ascendus is understood to be redeveloping this project, and this came for about 700 crore rupees. Both these projects and their sale, we understand, is on final stages, so the money may hit the books by the end of calendar year is what we understand. As far as comments go, we understand that DLF says that we do not comment on market speculation, and this is highly speculative, while GIC did not respond. But like you know, and like you mentioned as well, they are a high debt laden company. So for someone who has about 20,000 odd crores of debt sitting on them, this definitely is a breather.
All right, Manasvi, thank you so much for that. Well, on to another big exclusive that we're tracking today. Power Grid is close to getting a $600 million loan from the World Bank. Now, Prerna Barua is joining in with the details. Prerna, what project is this loan for, and how crucial is this project for the company?
Well, the project in question here is Power Grid's 800 kV, 6,000 megawatt ultra high voltage DC transmission system from Raipur in Chhattisgarh to Thrissur in Kerala. And as we understand from our sources, that World Bank has given in principle approval to Power Grid to extend a $6 million loan to the company. And of course, this is a very significant move, and the World Bank loan will definitely fast track the transmission project, but more so will also this project will add about 25,000 crore rupees to Power Grid's overall capitalization. But clearly, the company is expected to invite bids by June end. And of course, the project is also expected to be awarded by the third quarter. And the project cost is estimated to be at about 12,000 to 13,000 crore rupees. And the project will be completed in the next 3 years, that is by 2018. So clearly, quite a big development coming in from Power Grid. And of course, the World Bank loan will add about 25,000 crore rupees to the company's overall capitalization and will fast track the transmission line project for the company. Back to you.
All right, thanks a lot for that, Prerna. We are getting good news from the power sector at long last, so much beleaguered by either fuel supply issues or lack of demand from discoms. We'll take a break on that note, but coming up, Sudarshan Sukrani will join in for a much needed technical advice on the markets, and we will also get you other stocks that were in the news today.